iAnthus Q3 2018 earnings call. At this time, all participants are in a listen-only mode. Instructions for questions and answer session will be provided following the listen-only portion of this call. Before beginning formal remarks, iAnthus should remind listeners that today's discussion may contain forward-looking statements that reflect current views with respect to future events. Any such statements are subject to risks and uncertainties that could cause actual results to differ materially from those projected in these forward-looking statements. iAnthus does not undertake to update any forward-looking statements except as required. I'd like to remind everyone that today's call is being recorded on November 27th. I will now turn the call over to Hadley Ford, CEO of iAnthus. Please go ahead.
Thank you very much, and thank you all for dialing in and listening to our third quarter earnings. We have one ugly tape out there. It's a cold winter. U.S. and Canadian cannabis stocks off 30 to 40% versus their highs. RTOs are down. Public deals are tough to get done. Our own stock is down 34% from our high, and it seems like everyone's sharpening their knife sort of every time we turn around. But a little context to that, we're actually up. Our stock is actually up 17% versus 6 months ago. We're up almost 3x from a year ago. In pro forma for our MPX acquisition, our assets are up 11 times in the last 12 months. Potential dispensaries up 5x, and the staff up over 8 times. With the recent weakness in our stock, quite frankly, the stock is on sale. In fact, I would make the supposition that the whole sector is on sale. Many of you heard me say that 10 years from now, the sector might be worth $1 trillion of market cap in the U.S. You can pick any discount rate you want. The present value of the sector today dwarfs what the potential or what the actual market caps are today. If you can't figure out which management team to back right now, buy $1 of each and trade the volatility. The stock prices among the U.S. cannabis stocks are like the weather in Toronto this week. If you don't like what you see, stick around an hour and it will be different. Hold that portfolio. Get to know your management team over time. Do they have a plan? Have they done what they said they would do? And then begin to overweight in the teams that you trust. There's 3 keys to success in the U.S. right now, and iAnthus has executed on all of those. Expansion of footprint, access to capital, and hiring great people. But let's talk a little bit about the money right now. We were the first MSO to go public, the first MSO to raise money in Canada, the first MSO bought deal, the first to do a convert, and to date the largest private investment into a public MSO. But the real question is, what the hell have we done with all that cash? It's your cash, it's not ours, right? You're the shareholders, we work for you, so what have we done with it? Well, we basically do 3 things. We buy, we build, and we manage cannabis businesses. People tend to focus on the buying and building part, and we're pretty good at that. We've bought a lot of businesses, and we've been fairly judicious and disciplined with your money. We've spent $22 million in cash buying New York and Florida, and have created over $500 million of market value in building things for you. But we're also prudent in the management of what we own. If there's one number you take away from this quarter's press release, it's not the $5.2 million of system revenue in the quarter, which is up 16% over the second quarter. It's not the forthcoming dispensary openings in Florida and New York, or the glimpse of full rec, which finally appears to be rolling out across Massachusetts. It's not even the pending closing of our MPX transaction in January or the 10x asset growth over the last 12 months. No, the number that I want you to focus on is $4.9 million net cash loss for the quarter. That may seem a little odd for the CEO to ignore all the great growth indicators in the third quarter and focus on one expense number, but let's remember, cash is king. Cash generation is what ultimately drives the value of our stock, and you can't have cash without paying attention to expenses. Growth means nothing if it's not disciplined. 2018 was a great year for us, and 2019 looks poised for a similar performance. The MPX integration is going very well. We're on track to close in mid-January. MPX itself is performing very well operationally. We have dispensaries opening in New York, Florida, and Massachusetts. Our expenses are under control, and we have many, many, many strategic opportunities coming our way. A strange thing happens when you write a check for $850 million. A lot of people call you. I'd like to thank you all for the support. Thanks for your votes in the shareholder meeting on Monday. and thanks for the chance to get out of bed every day and make all of us rich. At this point, I'd like to hand it over to Julius, who will walk through the details of the third quarter.
Perfect. Thank you, Hadley. Before I walk everyone through some of our financial and operational highlights, I would like to point out that our financial statements and our MD&A are all uploaded on our website and on SEDAR. We've also provided a detailed press release with our quarter's results. Third quarter 2018, some of the highlights. Assets increased to $137 million at September 30th, 2018, which is a 344% increase from our asset base 12 months ago. With the anticipated closing of our MPX transaction, you will see our asset base grow to well over $350 million. The company showed significant revenue growth during the third quarter. Consolidated revenues for the company increased 101% quarter over quarter, increasing to $1.1 million in Q3 from approximately $500,000 in Q2. System-wide revenues, including the revenues from iAnthus's investments in New Mexico and Colorado, were $5.2 million in Q3, up 16% quarter over quarter from $4.4 in Q2. System-wide revenues from New Mexico and Colorado are unaudited and not consolidated by the company at present due to our minority ownership in New Mexico and certain regulatory restrictions in Colorado. However, I believe it is important to mention our system-wide revenue as it shows iAnthus's footprint in greenfield states such as Florida and Massachusetts, as well as in more competitive and mature states like New Mexico and Colorado. iAnthus is confident in its ability to be competitive in both types of markets and reaffirms our intention to develop a national platform of licensed cannabis operations. Our operating expenses for the quarter were approximately $8.9 million, and after non-cash adjustments, our operating expenses were approximately $6.5 million. The net loss for the 3 months ended September 30th, 2018 was approximately $10 million, and as Hadley pointed out, after the non-cash adjustments, our net loss for the quarter was $4.9 million. The company has also continued to strengthen its balance sheet, ensuring transparency for our investors. I would like to call out a few specific items. During the quarter, iAnthus elected the right to convert its outstanding convertible debentures early and issue shares for the repayment of its convertible promissory notes outstanding. 1.46 million common shares were issued for these conversions. As a result, the company has only one long-term $40 million convertible debt instrument outstanding from the May 2018 Gotham Green Partners financing. This instrument is eligible to be converted in May 2019 at a conversion price of US $3.08 a share. On October 10, 2018, the company closed its bought deal offering of approximately 5 million common shares at $6.65 Canadian for an aggregate gross proceeds of approximately $34.5 million Canadian. The company's cash balance is currently US $24.3 million, as well as another $5.3 million US of restricted cash. As of November 26th, the company has almost 21 million warrants outstanding, all of which are currently in the money, with strike prices ranging from $1.99 US to $3.60 US. The company would receive approximately $54.5 million US if all outstanding warrants were exercised. This would put our total cash balance at approximately $85 million if all of those were converted. Right now, our basic share count is 74.2 million, and our diluted share count is approximately 113 million. Pro forma for the MPX transaction, we will have approximately 157 million basic shares and diluted 223 million shares. Before I start to dive into a more detailed market-by-market overview, I would like to provide a short update on the MPX transaction. As everyone is aware, on October 18, 2018, the company and MPX Bioceutical signed an arrangement agreement pursuant to which the company will combine with MPX, excluding a new entity to be named MPX International, which will hold all of the non-U.S. assets of businesses of MPX. The transaction will position iAnthus as one of the largest U.S. regulated cannabis operators and expand the company's footprint to 10 states. The arrangement agreement provides that existing MPX shareholders will be entitled to receive 0.1673 common shares of iAnthus for each common share of MPX held. In addition, each MPX shareholder will receive common shares of the newly formed MPX International. It is anticipated that on or before December 13, 2018, that MPX will mail its information circular to MPX shareholders, and pending shareholder approval, which is scheduled for mid-January 2019, the transaction is expected to close by the end of January 2019. MPX is reporting its quarter tomorrow, so I will leave it to the MPX team to provide their full results. From an iAnthus perspective, we continue to believe very strongly in the MPX team and platform, and we eagerly look forward to 2019 as one combined operator. From a guidance perspective, iAnthus and MPX, from a combined basis, expect to finish the year with approximately $45 million US of combined revenue. From a system-wide perspective, which would include our unconsolidated results in Colorado and New Mexico, our calendar 2018 full-year revenue will approach almost $60 million US. We believe these revenue numbers put us in the same league as other U.S. multi-state operators. However, where I believe we differ from other multi-state operators is our momentum during 2018. I want to remind everyone, iAnthus's Q1 revenue of 2018 was only $225,000, and the new iAnthus will finish 2018 with well over $45 million US of revenue. And what I can assure you is that our management team's singular and relentless focus on aggressively growing our platform will continue throughout 2019 and beyond. Now to move on to some of the specific market-by-market updates. First off with Massachusetts. Mayflower opened its flagship dispensary on July 19, 2018. For the quarter, sales were approximately $600,000, which is a combination of both retail and wholesale revenue. We are already seeing significant growth in Q4 and expect a very strong finish to the year on both the retail and wholesale fronts. Total harvested dry plant material increased from 91 kilograms in Q2 to almost 500 kilograms in Q3, reflecting a 440% increase. Our cultivation facility was built with a state-of-the-art design, and we expect continuous and significant yield improvements with each subsequent harvest. Mayflower continues to move through the adult use process within the state. Mayflower is also in the application process for an adult use license for its medical dispensary location in Boston. Mayflower is currently negotiating a host committee agreement for adult use at the site of our Lowell location. And for our third expected dispensary, Mayflower is in a request for proposal process with the municipality of Worcester, seeking a host committee agreement for an adult use cannabis dispensary. Multiple community meetings have been hosted in Worcester, and Mayflower is awaiting the outcome of the selection process. With Boston, Worcester, and Lowell, we look forward to operating in 3 of the 4 largest cities within the Commonwealth of Massachusetts. We're optimistic that we will be recreationally licensed and selling within Boston in Q1, Lowell in Q2, and Worcester in the back half of 2019. Moving to Florida. Since the implementation of the medical cannabis program in mid-2017, the Florida market continues to show exceptional growth. As of the end of November, the program has approximately 200,000 patients and approaching 2,000 qualified physicians. Grow Healthy continues the rapid expansion of its retail footprint and has signed 16 leases to date, including major cities such as Miami, Fort Lauderdale, West Palm Beach, Tampa, and Orlando. Grow Healthy anticipates opening its first 2 dispensaries in December 2018, including its flagship in West Palm Beach. There will be approximately another 6 in the first half of 2019. In the middle of October, Grow Healthy launched delivery from its new hub in Deerfield Beach, allowing patients residing throughout South Florida to place and receive orders within 24 hours, 7 days a week. The addition of this second delivery hub contributes to the company's goal of improving delivery routes and shortening wait times for its patients across Florida. Delivery revenue for Q3 was $150,000, which was up 100% over Q2, and delivery results in the beginning of Q4 in October and November continue to strengthen, and we expect a very strong finish to 2018. Upgrades to the cultivation facility are also underway, and we are expected to be completed in the first, and some are expected to be completed in the first quarter of 2019. We're expanding our indoor cultivation in our 38,000 square feet of Building 5 of our Grow Healthy campus, as well as building a 60,000 square foot external shade house on site. These expansions will provide 60,000 square feet of flowering canopy and provide well over 8,000 kilograms of annual plant material. These expansions will serve to increase capacity as well as lower our overall costs. Moving to New York. Site work at Sativa's 49,000 square foot cultivation and processing facility is now complete, and phase 1 of the facility is on target to be completed for the first half of 2019. Annual output will be approximately 2,400 kilograms of plant material. The remaining acreage in Warwick can support future expansion of up to 125,000 square feet of total cultivation space, which would support annual output of 12,000 kilograms of plant material. Construction is in the final stages of completion at Sativa's flagship 2,000 square foot dispensary in Brooklyn and is expected to open before the end of this year. The dispensary is anticipated to be the first medical dispensary to open in New York City's most populous borough of 2.6 million residents. The dispensary will be located across from the Barclays Center. Sativa has also entered into a wholesale agreement to supply the dispensary with a wide range of products ahead of production at our own facility. The company has also executed a lease in Wappinger Falls, which will be one of only 2 dispensaries to be located in Dutchess County. This will open in Q1 2019. Lease discussions for our remaining New York 2 dispensary locations in Staten Island and Chemung are still outgoing. With regard to the states of Vermont, Colorado, and New Mexico, my comments will be more brief. Vermont, our revenue was $196,000 for the quarter, and approximately $570,000 year to date. Colorado, our revenue was $884,000 for the quarter and approximately $2.9 million year to date. As I've mentioned before, our results from Colorado, given regulatory restrictions, are not consolidated in our numbers. And New Mexico's recorded revenue was $3.2 million for the quarter and $9.7 million year to date. What I believe is most interesting and notable is the regulatory and political landscape in these 3 states. In Vermont, cannabis is fully legal, and we expect that there will be a full adult use bill in 2019 that will allow for adult use sales for operators such as ourselves. In Colorado, the election of Governor Polis will likely allow for the easing of public company ownership and other restrictions. And in New Mexico, the election of a Democratic governor and continued momentum in the state will hopefully put a recreational ballot initiative on the bill in 2020. That's it for my prepared remarks. Hadley, back to you.
Thank you, Julius. At this time, we would like to open it up for questions from those of you who have been good enough to dial in this morning.
Okay, so anybody that would like to ask a question, please press star 1 on your telephone keypad. Please press star 1 on your telephone keypad. We'll just wait a moment to compile a Q&A roster. Your first question comes from Matt Bottomley from Canaccord Genuity. Your line is open.
Good morning, Hadley and Julius. How you doing?
Very well, Matt. How about yourself?
Good, thanks. I just wanted to start with the MPX integration. So you gave a bit of color on that, but just wondering if there are any challenges or hurdles with respect to dealing with the individual states, Arizona, Maryland, et cetera, that MPX is in, as well as any update on whether or not you're able to hold both of the Massachusetts licenses. And finally, just on the MPX integration, if this acquisition closes in January, is that going to allow you to consolidate MPX's results wholesale, or are you going to have to do it state by state as the regulators sign off?
I, of course, will hand the technical question of consolidation numbers over to Julius, but let me talk about the integration and some of the other pieces of it. It's going very well. I think that we haven't had any real issues come up. It's mostly marching forward, as you'd imagine, from an operational integration, IT integration. I think the the legal side, lawyers are crossing T's, dotting I's. We still anticipate this to close mid-January, or have the shareholder meeting mid-January and close a couple of days after that. So everything's on track. We continue to be very impressed with the team, very impressed with the operations that they have. I think probably some of you on the phone call got a chance to take the tour of the MPX facilities when we had the Vegas conference, and that's a pretty impressive operation. I think the Massachusetts piece, which is really the only state that we overlap in, that's an open question. We're going to rather than ask for permission, we're going to ask for forgiveness. We'll close the transaction. We'll go to the state and see what they say. It's not a slam dunk. It's uncertain at the state level. We would be able to keep the grows, both of our grows. If the state were to say that you're only allowed to control 3 stores, we'd have to do something with the other 3. But we'll cross over that after we close the transaction. And Julius on the consolidation.
Yeah, sure. Just in terms of the consolidation. So given that we're both going to report sort of Q4, and we'll have to report Q4 theoretically separately, because as of December 31st this year, the transaction will most likely not be closed unless there's some sort of miracle happens, but it's not going to be done by December 31st. So by the time we have to actually report Q4, that, as you know, is going to be at the end of April. And then Q1, which will be the first integrated quarter, that's going to be at the end of May. Our view is by the time we actually have to report that consolidated quarter, we're going to be able to ensure everything is tied up within all our various states, so that we're going to be able to report everything as one consolidated company. So it's still, I wouldn't say early days, but our view is, given the timelines and given the reporting periods, we're pretty optimistic that it's all going to come together fully consolidated.
Perfect. That's helpful. Next, just was wondering if you guys had any color you wanted to share on any takeaways from the midterm elections, if it changes your strategy at all as to certain states you might be looking at, maybe different political or politicians that have come in that are favorable or unfavorable to where you guys are executing right now.
Sure. I guess everyone's pretty aware that Jeff Sessions got bounced out, but there was another Sessions that got bounced out as well, with the Dems taking over the House. The little Sessions job was to put forth what bills the House would vote on, and if possible, he hated cannabis more than Jeff Sessions did. So I think the biggest change we're going to see going to 2019 is, kind of all these discussed bills that have been floating around in the House actually may come to the floor for a vote. We think that anytime that happens, that's another pebble on the scale. Things will move forward, and we wouldn't be surprised if we actually saw some meaningful legislation come out of the House and go over to the Senate for reconciliation. But we see it as an overall positive that the Dems are in charge of the House now from a cannabis perspective. It hasn't really changed the view of which states we would go into. I think there were some statewide votes and decisions that got made. Obviously, Michigan moving forward aggressively is quite compelling for us. A number of other states had positive state level votes on cannabis. But our focus has pretty much remained the same on the states that we want to go into from a federal overlay perspective.
Great, thanks. And just last question for me. Julius, you gave some color and some guidance as to when your dispensaries in Massachusetts might start transferring over to rec. Just wondering what that process is. I know that state has been a pretty slow state the whole time when dealing with the municipalities. So just wondering if there's any risks to further delays, or is the state totally on board and it's just a question of bandwidth to get them through? And then just last question, still on Massachusetts as well. Just wondering what your normalized gross margin is expected to be in Massachusetts, because just noticing the quarter, obviously it's pretty low for this quarter, and just wondering if that's because it's the first major inflection point of it coming online. And I'll leave it there. Thanks a lot, guys.
No problem. So yes, in terms of Massachusetts, the way that the process looks is obviously it's incredibly local, and that our team there has to deal with each of the sort of local local authorities and sign a host committee agreement. In some cases, given the fact that we may be one of the only dispensaries in some of these communities, they have not signed a host committee agreement with anyone, and so they're going through that process for the first time. They're negotiating with us around it, and I would say that there is momentum, but it tends to be a little bit slow going. There is a learning curve to some of it. We're optimistic around the host committee agreements in all three of the locations that we'll be able to either secure on reasonable terms for us. And then at that point, it's just we're just ensuring that our medical license, that in addition to our medical license, we'll have a recreational license. That's the case in Boston. In Lowell, we're applying directly for the recreational license, and with Worcester, as we've sort of detailed, we're very much in the running for a recreational license there as well. Our team remains optimistic. We've already seen 2 dispensaries open within the state with full recreational to a ton of fanfare. I think the pressure is on a lot of other municipalities and communities to move a lot faster than they have in the past. In terms of gross margins, obviously we continue to ramp up. The margins for the quarter, again, because of the ramp up for Q3, I think are a little bit cloudy, and for Q4 we'll have a better sense of them. So in terms of long-term margin, we're still trying to move forward with our 2019 planning, so I'm not going to give a sort of directional view of it. That will be something I think I'll provide when we get to a little bit more steady state. We're just in such a ramp-up mode, especially anticipating full rec, and I think when we hit that steady state sort of in Q1, we'll have a much better view to give to you guys.
Okay, thanks again.
Your next question comes from Russell Stanley from Beacon Securities. Your line is open.
Good morning, guys.
Morning, Russ.
Just around the discussion of local community approvals, I just wanted to shift to Florida if I could. The 16 leases that you've signed, is that the only kind of local approval that's required in that market? And I guess should we view lease signings as basically the measure or the metric, meaning you're through the gate as far as local approvals are required?
I have Carlos Perea on, who's our COO and overseeing the Florida process. He can talk more explicitly about lease signings and timing and local approvals and all those good things, and getting curb cuts and power and all the wonderful things that happen from a building perspective. Carlos?
Sure. Yeah, Russell, I think that's a fair way to think about it. The process is very different in Florida, as you might imagine. But once we enter into a potential location, we've already understood the local community's position on allowing us to open up a medical facility. Obviously, rec is not on the roadmap immediately right now, but yes, you can take the 16 lease signings as very high probability that they're going to turn into dispensary openings in the subsequent quarters.
Okay, great, and thank you on that. And I guess just moving, dovetailing into further on Florida, what is your latest outlook for the battle around the legal battle around the cap on the number of licensees, and I guess in parallel the requirement that the licensees be vertically integrated?
That's a great question, and we spend obviously a lot of time and money in monitoring what's happening there. I couldn't tell you that I have a prediction in any way, shape, or form. Obviously, we have some ideas on how we'd like things to break, but
sure.
Given the number and the nature of the lawsuits, and it's pretty lengthy. I think the last briefing I got was somewhere up of 50 pages from the attorneys on the status of the lawsuits and the continuances and the stays, and it's a pretty complex field. But we don't at this point anticipate any major shift in what's happening on the regulatory landscape.
Okay. Thanks for that. And maybe if I can move on to New York, understanding the timelines on the first and second dispensaries, that looks great. Given the lease discussions and where you're at there on the third and fourth dispensaries, so when do you anticipate having those open?
That's probably not till the second half of 19, and it's not just how fast we can move. It's really making sure we time it to come online with the capacity that we're building out there.
Okay.
And, that's aggressively, that's really our number one focus as Brooklyn is getting up, is making progress on the cultivation facility and processing facility. And the good news there is we've been more aggressive, not in the total build-out, but in phase one to get us ready for the next phases. So we're putting in some infrastructure, basically building out the footing for the entire greenhouse structure in anticipation that we might pull the trigger faster on phase two.
Okay. And maybe if I could just ask a last question on that front, the cultivation in New York. You've guided to first half of 2019, and I'm reading into that. Obviously, it looks more like Q2 than Q1, but just wondering what your thoughts are. If you can narrow it down any further, do you think you're talking more like April-ish or towards the end of first half?
It all depends on definition of terms. If you're asking when we're going to get cultivation out, certainly that's towards the latter half of Q2. We're doing everything we can to compress those schedules that we can within the regulatory framework, and including how we're getting our early genetics going. But the reality is we're also subject to weather in New York, and that's something we have to deal with on a day in and day out basis as to how much construction can actually take place. So far, we've been pretty fortunate that we've been generally slightly ahead of schedule, but there's way too many moving pieces to give you guys. Julius asking me this on a constant basis, and we're really in a month to month, not week to week kind of granularity at this stage.
Understood. That's great. Thanks for the color.
Sure.
Thank you, Russ.
Your next question comes from Jesse Pyslak from Cormark. Your line is open.
Hey, good morning, guys.
Morning.
Just to shift focus back to Massachusetts here for a moment. Can you give any color just kind of around the current run rates for the Mayflower dispensary?
I'll have Julius talk to the run rates of the dispensaries.
Sure. So in terms of one of the past weeks, just on the retail side, we sort of net sales for Mayflower, this was again for just 1 week, approaching around in the range around $50,000-$55,000 dispensary revenue. Obviously, this is just open medically at this point. We believe as it moves to recreational, it will be sort of an entirely different ball game. I think one of the views that our team has is that our cultivation facility is actually going full tilt at this point, which is why we are looking at sort of monthly sales on the wholesale side approaching anywhere from sort of $300,000-$500,000 a month. So when I look at when we look at sort of what our revenue from the retail side, sort of already in the range of $150,000 to $200,000 a month and continuing to dramatically scale, plus the $300,000-$500,000 of wholesale. Just right now from our Massachusetts operation, we're sort of doing in the range of sort of $500,000-$600,000 a month total revenue from Mayflower. And again, we believe that's going to continue to month over month just dramatically change, especially as we move into full recreational. Okay, that's great. And then just can you talk a little bit about your thinking in terms of how do you kind of balance the Massachusetts wholesale business with the expectation that your rec licensing might come in Q1 and just kind of that dynamic? I think that in a lot of cases, we know that Massachusetts is going to be an absolutely fantastic market, and our view is that we're not competing with every single operator throughout the state. And our view is whether from wholesale or from other opportunities that we have with sort of working in a collegial way with other people within the state, we're taking advantage of that, whether it's sort of paying it forward in terms of some wholesale sales to guys that we know that we're going to be able to work in a very positive way in the future. But we, as I mentioned in my earlier comments, we are very optimistic about our cultivation capacity there, and it's from harvest to harvest, we're seeing continuous improvement, and we believe that in a lot of cases it's going to be extremely, it's going to be sufficient out of the gate, and we're already looking at sort of other expansion capacity, expansion within the state, whether within Mayflower or within the MPX cultivation facility as well.
Okay, and then just one final question. Hadley, in your opening comments, you kind of alluded to seeing a lot of opportunities for strategic investments, and that you're seeing some pretty strong deal flow. Just kind of wondering, how do you feel about your bandwidth right now to maybe execute on some of those pipeline items while you're still kind of operationalizing your East Coast markets and having to integrate MPX?
Yeah, that's a great question. Job one is to ensure that our operations stay on track. And Carlos sweats every detail every day. From the integration of MPX, we have to make that work. So that's kind of, if you're allocating resources, you sort of allocate first to what you have in the operational, and then you allocate to the integration piece. And then to the extent we have capacity left over, we take a look at some of the many opportunities that are coming over the transom. Now, we do have a dedicated M&A team, so their job is to look, assess, parse, and rank the opportunities. But we tend to be exceptionally disciplined on resources. We're very objective driven. We'll look at just a handful of things at a time. We either move forward with them or we don't, and then the next one goes into the hopper. So job one is exactly as you said, keep the operations moving forward. Job two, integrate MPX, and then we'll see if we've got some capacity left over to continue to acquire things in 2019. But my guess would be that we would. We've done 6, 7, I guess 8 with MPX acquisitions. The MPX team has done 7, so we've got a lot of M&A chops on the combined team.
All right, that's all for me. Thanks, guys.
Okay, thank you.
Your next question will come from Andrew Semple from Echelon Wealth. Your line is open.
Good morning.
Are you on mute, Andrew?
Oh, excuse me, I was on mute. I was. Excuse me. Good morning, everyone.
Good morning.
My first question is on the Florida market. Going to 2 dispensaries by the end of this year, and I believe you mentioned another 6 in the first half of 2019. What does the supply of those dispensaries look like? Is it going to be majority wholesale, or will Grow Healthy facility be able to keep up with that?
I'll ask Carlos to answer that question.
Sure. Yeah, unfortunately in Florida, not for us, but I think for the market, there really isn't much wholesale allowed in the current regs outside of crop loss, which folks haven't tested yet very, very much. So yes, we all are anticipating being internally supplied, and yes, to answer your question specifically, we're timing the dispensaries coming online with an increase in capacity for cultivation and processing, and that's probably as much of a gating item now as opening the dispensaries themselves, is making sure that we don't get ahead of ourselves and have shelf space that's empty. So those two things are pretty tightly aligned. That's why we're adding about 5x to the capacity currently. We're also adding some infrastructure to allow us to go beyond that on the indoor cultivation in Florida, and then we're also adding quite a bit of processing capability in the form of a new lab, and at the same time, we're also doing some outdoor or quasi-outdoor cultivation as well to increase our biomass and to bring down our costs. But those are aligned, and the same thing in Massachusetts. To the earlier question, we had anticipated we'd have rec by now. That's why we brought the capacity online. We have a little bit more flexibility in that market, but in all of these markets, we're timing the dispensaries and the cultivation to be generally in line so that we're not sitting with empty shelf space or sitting with a lot of excess capacity.
Okay, great for that. Thanks for that. Also on the delivery in Florida and I guess in New York, do you expect the delivery to be an important part of your business going forward, or you're going to put more emphasis on the driving customers to the dispensaries where I guess there's a little bit more engagement and interaction with the brand?
So the first part of your question is a great one, and we think it's critical to our success and to overall meeting the needs of the market. You can look at it in a number of ways, but if you take the Florida market as an example, we've been delivering product there for now several months, and we've just increased that capacity and the delivery services Julius mentioned. And it's resulted in a very strong attraction of new patients there. We've been able to build a patient base almost as fast as we've been able to do it in Massachusetts. I will concede it's very dispersed, not as cost effective when you're having to travel all over the state from one or two locations, but it's building up that momentum and that base. We had over a $22,000 day, I think, in delivery. That was a very unusual anomaly in one day of orders there for Black Friday. But as you can imagine, it's really helping us build that momentum ahead of time. Now, subsequent to opening the dispensaries, we know that a lot of folks will want to come in and have an immersive and educational experience, and that's a big part of what we're trying to offer. But we also know that once somebody has a product selection, or if they're in a condition that makes it difficult to get to the dispensary, we want to have that delivery service, and we think that's an important and growing part of the business. So we're not looking to outsource that just yet. We've looked in both markets, and we think for the most part in Florida, we'll continue to do that ourselves. New York might be a little bit different, but I think it will be equally important that we have quality delivery services.
Great, thanks for that. Switching gears to the MPX transaction, what are your first priorities in the first quarter or two in terms of the integration? Is it going to be focusing on the single branding? Is it going to be some additional build-outs in state markets? Do you want to comment on what your top priorities are there?
Carlos, I'll hand it over to you. I think the first piece is getting operational integration. I know you've been working on that since the day after we announced the transaction, so maybe you could talk a little bit about that piece of it.
Yeah, and then I'll hand over the branding stuff to you. So,
and actually, Carlos, I just got a notice from the operator that we need to stop by 9:29, so you have 1 minute to describe all the things you're doing.
In 30 seconds. So the first thing is making sure that we're keeping the talent that we're pulling into the equation. And so we've had some really strong operations there. We want to keep that momentum. So keeping the people's first. Second is making sure the structures they're working in tie to the structures we're working in, so we have a common set of organization structures so people know who to go to, how to get things done efficiently, and we're not duplicating efforts and we're not leaving gaps. So that's the very first thing, is just making sure the workflows make sense and people know how to get stuff done. And that's well underway, and it's going very smoothly so far.
And I apologize. We'd love to answer questions all day, but we do have to stop to keep comments pre the market opening. So thank you all very much for your time today. Thank you all for your support and trust in us. And we look forward to finishing out the year strong, and look forward to the next time we get to announce earnings and talk with you all. Thanks.
Thank you, everyone. This will conclude today's conference call. You may now disconnect.